Alrighty guys, I just want to quickly talk about something I've been going over in my mind recently about the Evergrande situation and the GME and AMC plays, any of these meme stocks, and the current, economic situation going on the economic fallout we could have from Evergrande. But I'm just going to go over kind of a hypothesis. Maybe this is more or less a conspiracy theory, but I think there's a lot of good evidence that backs up what I'm going to talk about. So we're going to talk about Evergrande. Shorting bonds. I just want to briefly go over. There's a blur where Ken Griffin was talking about, from Citadel, was talking about leveraging markets using the bond market. And even recently we had seen some developments in AMC where some of these hedge funds were melting bonds. They were getting paid by melting bonds to short stocks. So they're essentially getting paid to short stocks using bonds that these companies, these publicly traded companies, had issued against their own companies. So people were able to buy the bonds, and that's what these hedge funds were doing, is they were getting paid interest to then short stocks. And the best short is a company that goes to zero. They go bankrupt. And what I think is happening with Evergrande and all these Chinese companies, because these hedge funds, they delve deep into any company. They know all the financials way better than you and I will ever know. They know that these Chinese companies they were shells. And what they were doing is they were they're buying bonds basically. They're buying these Chinese companies' bonds, tons of them. They're getting collateral here in the US, but they're also using that collateral to short the same company and to take out massive short positions against the company that they bought the bonds on. So we see companies like BlackRock. Okay, BlackRock, we can find pretty quickly, along with a bunch of other hedge funds, that they have gobs and gobs of these Evergrande bonds. Those bonds were derated. They were put to a junk rating pretty much last Thursday, or this last Thursday. Those bonds that they own for collateral are junk, but that's not a problem, because as soon as the company files bankruptcy and they get delisted and they are no longer an entity, a publicly traded entity, all the short positions that they took out on those companies are that is an instant home run for a short position, because you can naked short a stock to you could do it to 100, power of 100 to the power of 100. You could do it to as much as you want. You could naked short a company into oblivion. Okay? And it doesn't matter, because as soon as the company does this, you win. Your short position immediately became exponentially more profitable than even if it went down to a penny. Okay? Because you never have to return or worry about any of the shorts. Nobody goes back and counts or figured out if you naked short it, it's gone. It's delisted, it's over. You like that's the perfect short. Okay? Is bankruptcy. And all these Chinese companies are going bankrupt. And they knew it. They knew they were going to go bankrupt. They knew, these companies have been selling assets since like they've been soft liquidating, so to speak, since early this year. Like the executives were selling stuff and selling assets, and I mean, all they're doing is, because anything that goes into bankruptcy has to be liquidated and given to the shareholders. Well, these companies are literally going to go and they're going to be like, oh, we got nothing. And that's what happens and that's what I think was going on, is these hedge funds knew what was going to go on, and they were like, these are 100% guaranteed to go bankrupt. We're going to short these in oblivion. We're going to use the leverage that we got from the bonds, which was a 1-to-1 ratio, okay? Pretty much dollar for dollar. Okay? And we're going to short everything in the U.S. too. And that's what they did. So if we draw out like a flow chart, because for months we've been like, how are they still shorting AMC and GME and controlling these stocks? Where are they getting the money from? They're getting them from okay? They were using these Chinese bonds as leverage to short everything. And every time I look at a stock like Ocugen, 45% short interest, and the top ones are Susquehanna and Bank America and all these other firms. I'm like, well, what's going on? Well, a lot of them, it doesn't matter. They've shorted just about everything. And we think that, you know, if the economy goes down, that these hedge funds are going to be in trouble. But all they did was, let's just draw out a domino. And this will be, oh man, my writing's terrible. But we'll say this is Evergrande, and that's in China, okay? And this is the US, okay? And this is India, okay? And we've been talking about the Great Reset, where everything's going to get wiped out, and actually, it's just a great. These guys, like 2008 was a soft Great Reset, because all it did is they naked shorted everything, crashed the economy using the same strategy as using either. I mean, it's pretty much the same thing. They wrote a bunch of junk bonds. All these banks, they had the banks do a bunch of junk bonds, okay, against people that couldn't pay, which is the same thing. All they did was use the American public as the crappy debt, okay? And then they had the crappy debt listed as, they had a bunch of doo-doo listed as AAA bonds, okay? Top tier. They're like this steaming pile of shit here. This is top tier grade bonds, okay? And they just wrote a ton of them, gobs of them. And then they shorted the market. As soon as everybody found out the bonds, they wrote a bunch of junk bonds and everything collapsed. The guys that shorted the market made gobs of money. And they got bailed out and all that stuff. And some of these firms got bailed out. I think Citadel got bailed out. But I think it's more semantics, because these guys they've been doing this a lot longer than we have. They know how to leverage this bond market way better than we do. And I think that that's what's going to happen is this Evergrande domino is going to fall over, and then we're just going to have a bunch of dominoes laying on the ground. And they shorted everything, okay? They shorted China. They shorted in the US. All the companies, everything was shorted. They shorted in India, okay? And how does this pertain to AMC and GME? I'm sorry this is a bit longer than I thought, but what is... I mean, these aren't the only two. There's gobs of other stocks that were heavily shorted, naked shorted, whatever. And I'm not saying I have proof of naked shorting. I mean, it's pretty easy to see. If you look at all the amount of trading volume AMC's had this year, it's floats traded like 100 times or something ridiculous. It's madness. And if you look at the dark pool volume that's been trading on the stock, especially during the spikes, I mean, it's absurd. It's absolutely absurd, the amount of volume that's traded on those stocks. But the reason I'm talking about these is I think AMC and GME, Wall Street Bets, that was kind of a fluke that they found out that those companies were heavily shorted and that the prices rose, because the original intent was this, okay? All right. That was the goal. Okay? But that didn't happen. So what I think is going to happen is you're going to see good, you'll see price increases. I think you'll see a so-called squeeze. All right? I think you will. In both of them and a bunch of other stocks. And they're going to have the short interest, because that's what we look at. Okay? The short interest will become zero. And all of those companies that short AMC and GME, yeah, they'll lose a little bit on those bets, but they made way more on the Evergrande short. Okay? This is the real money. They'll get out of this, whatever. We got the money for it, that's fine. We don't care. It all came down. This was the domino so that they could get out of AMC and GME. And then they just want us off their backs, because it messes up their payment for order flow and how the brokers hold shares. I've been doing a lot of research on if you do a limit order or a market order. If you do a market order, they can hold that market order to when they want to execute it, what's best for them. Oh man, there's so much stuff. It's amazing what they can do with our orders. Park them, delay them. I mean, there's certain microsecond latency requirements for communications for the networks, as far as market makers to the stock exchanges in New York, as far as price requirements. I mean, talking like 50 microseconds or less, and it's even less for the actual pricing servers. But as far as orders coming from a retail broker to a wholesaler, that's where things can get a little goofy. I'm going to do some more videos on that. There's a lot of stuff there. But all I'm saying with that is buying and holding is a major problem for those platforms, because the goal is to be able to buy the shares at a later date for less than you purchased them for. They're pretty much shorting the shares that you buy, taking out a short position. As soon as you buy shares, they're going to take a short position out against that, because it's very likely that you're going to, one way or the other, sell at a lower price, and there's no reason for them not to buy the shares. Write an IOU for what you bought, buy the shares later at a lower price. And that's actually what happened in January with Robinhood, is they didn't actually own those shares. They had to go back on the open market and buy the shares at a much higher price, because AMC went up from $4 up to $27 in pre-market, and that wasn't supposed to happen, and that was their black swan event, and that's how they had to get more capital on hand. Just some interesting things. But I think what's happening is everything's inverted. Is a lot of these companies that we think are going to go bankrupt in this great reset, when AMC, GME go up, that all these companies are going to get liquidated. They're not. In fact, they're going to be more rich when this is done, because they're going to continue to short the stocks from the top, okay? It'll go up. They'll reshort the stock. The price will plummet. Eventually, people will leave, and they'll make money on that. And they also made. That's where their money was. It was on that. That's what I'm thinking, and I'm talking trillions of dollars was made, and they're going to get ready to rip these through the roof and get rid of us retailers. And we'll go off. We'll make a couple mil, whatever. I don't know how many shares people have, options, but I think we're getting the wool pulled over our eyes as far as what's going to happen to these companies, because they're not as over leveraged in the way that we think that they're over leveraged. Either way, let me know in the comments section what you guys think. Maybe I'm crazy here. And in fact, none of this is financial advice. This is all just conspiracy theory anyways. It's just madness. Let me know what you guys think.